Let's have a session on SWOT analysis. This is for AQA A Level Business. So SWOT analysis is a strategic planning tool. And the idea is you do an internal audit to find out your strengths and your weaknesses, and an external audit so you can find out your opportunities and threats to the business. And you do that before you develop the strategy. So in this video, we are essentially looking at all the different topics in this playlist for Unit 7 and how you could pin it together for a longer question on SWOT analysis. So on the internal side, or strengths and weaknesses, we could be thinking about financial performance, income statements to see if the business made a profit, and you could be looking at gross profit, operating profit and profit for the year. To look at the balance sheet or the statement of financial position to see the net worth of the business and the distribution of current and non-current assets and liabilities. And of course, retained profits and total equity. Also, once you've got these statements here, then you might want to do some ratio analysis. You'd have to use both if you wanted to look at the profitability ratio, that is return on capital employed. Maybe you want to look at the liquidity of the business, so you'd use the current ratio. Maybe you'd want to look at the gearing of a business to see the debt levels. Maybe you'd want to look at the efficiency ratios and thinking about payable and receivable days or inventory turnover, and they might be strengths or weaknesses to the business. Clearly this is internal. And the key thing with ratio analysis is thinking about the rivals and thinking about over time the trends for the business. In how has it been trending? Has it been trending positively or negatively in terms of your interpreting those numbers? Now the next thing to think about is beyond finance, think about other functional areas. And this would be things from Year 1 A-Level Business, thinking about marketing, operations and HR, Units 3, 4 and 6. So operations, you could be thinking about capacity or CAPU, capacity utilisation, or average cost per unit, or labour productivity. And HRM, you could be thinking also about labour productivity and labour turnover, retention and employee cost as a percentage of turnover. Additionally, for marketing, you could be thinking about market share, market growth of the business. Beyond that, you could think about if the business has a strength in terms of its price elasticity of demand, looks to be or is suggested to be inelastic, perhaps because it has brand loyalty, then they're all possible strengths to the business. Or you could flip that. Maybe in that last case, the business doesn't think it has a very low price elasticity demand and it wants to bring it down. So it sees it at the moment as a weakness. So finance and then other functional areas is one way to look at your strengths. You could be looking at the core competencies of the business, maybe the short versus long-term outlook of the business. Also, you could be thinking about alternative performance measures. So we're thinking here about Kaplan Norton's balanced scorecard, and additionally looking at Elkington's TBL, triple bottom line, looking at the people, the planet, and the profit, of course. So they're internal ways to look at a business in terms of the audit. On the external side, the opportunities and threats. So first thing you could be looking at is political change. Perhaps there's new regulators that have been put in place, and that would be an opportunity or a threat to a business. New infrastructure has been put in place. It could be there's new trade agreements. Perhaps that could be an opportunity to the business. Legal changes, maybe there's new competition law, maybe there's new labour market laws, could be minimum wage changes, maybe there's new environmental laws. These are all possible opportunities and threats to a business. Of course, the economy is important. Number 3, economic change. GDP could change, and particularly you might relate that to the YED of the business and look at the impact on sales. Taxes could change, they could increase or they could fall, and of course that's a type of fiscal policy. Exchange rates could change, and that's important if you trade abroad or if you look to import from abroad. Inflation could change, your PED would be important. Of course, fiscal policy, but as well monetary policy is important. We're thinking about interest rate changes, maybe that could have an impact on your gearing. We're also thinking about globalization and emerging economies. They are all opportunities to a business, or perhaps threats to a business, depends on the nature of the topic. Social change is important. Urbanization, migration, those changes in populations, lifestyle changes, the growth of online businesses clearly could be an opportunity or a threat to a business, depending on which side of the coin you're on. Increase in CSR, corporate social responsibility, perhaps that could be an opportunity to a business. The movement in the concept of shareholder towards stakeholder focus, and Carroll's pyramid, CSR pyramid. So they're all things to think about in social change. Maybe you look at technological change. You could think about the growth of online businesses. Or you could be thinking about the competitive environment, the rivals themselves. And maybe you'd look to use the model that's Porter's 5 forces here. thinking about those barriers to entry, thinking about buyer power, supplier power, thinking about rivalry or substitute threat. So I hope that helps if you were to get a really big question on SWOT analysis and where you'd frame your points for your internal strengths and weaknesses and your external opportunities and threats. See you at the next sesh.